This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. Global trade distortions seem to be growing. But first, after 3 weeks of gains, some quite minor though, last week US mortgage applications fell again and are now down 13% lower than the same week a year ago. The pushback up of benchmark mortgage rates above 7% is an effective barrier for many potential house buyers there. There was another well-supported US Treasury 10-year bond auction, and that brought the median yield down to 4.22%, sharply lower than the 4.37% at the prior equivalent event a month ago. In the Wall Street equity markets, both the S&P 500 and the Nasdaq hit new all-time record highs again today. The same happened in Tokyo. All this comes ahead of tomorrow's US CPI data for June, when a 3.1% rate is anticipated. Meanwhile, in Hong Kong, equity markets are going the other way. They peaked in 2018 and it's been all downhill since then. Its gloss has certainly faded the closer it is tied to the PRC. And Shanghai's peaks were back in 2007 and 2015. Neither replaces defined equity gains recently. And in China, their CPI inflation rate is still positive, just. It came in at 0.2% from a year ago in June. Analysts had expected to rise to 0.4% from the April and May rates of 0.3%. Beef prices are still falling hard, now down 13% from a year ago. Lamb prices are down 7% on the same basis. Milk prices there are down 1.8%. And China's producer prices are still deflating, down 0.8% in June from a year ago. That was as expected and is less than the 1.4% drop in June. Ordinary demand and the coming on stream of new supply, especially from Chinese-owned mines in West Africa, has the prospects for the iron ore price to slip below $100 a tonne soon. There are implications for Australia here, although their high-grade product and shorter distance of shipping are advantages that won't go away. Tomorrow we'll get China's export data for June, expected to be strong in advance of new American tariffs. But Chinese overcapacity is causing a spreading backlash, and countries like Mexico, Brazil, Chile and the EU are racing to protect themselves from the dumping flood. And now Southeast Asian nations like Indonesia, Thailand, Vietnam and South Korea are also weighing restrictions on Chinese exports. But some countries are so closely tied to China's orbit that it'll be hard to resist China's pushback. This is a trade pressure that just won't go away and may reshape the global trade landscape again. Stubbornly high freight rates, partly in response to the overcapacity and export imbalances, aren't helping either. De-risking has a long way to go, it seems. The US Treasury 10-year yield is now at 4.28% and down 2 basis points from yesterday. And the price of gold will start today up $21 at $2,372 an ounce. And oil prices are 50 US cents firmer at just under $81.50 a barrel in the US, while the international Brent price is little changed at $84.50 a barrel. And the Kiwi dollar starts today 40 basis points lower than this time yesterday, now at 60.8 US cents after the RBNZ monetary policy review. This takes it back to the level we had at the start of the month. Against the Aussie, we've fallen almost 0.75 cent to 90.2 Australian cents. Against the euro, we're down 0.5 cent to 56.2 euro cents. That all means our trade-weighted index starts today down 60 basis points at 69.9. And the Bitcoin price starts today at $57,692 and virtually unchanged from yesterday. Volatility over the past 24 hours has stayed modest at just on plus or minus 1.8%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.